Hello fellows, welcome to my channel. This channel is entirely dedicated and created for educational purposes only. Here you can find high quality educational materials to learn the basics, whether you are a beginner, more advanced or an intermediate trader. For people that want to see more action, you can check the link on the top right corner and also the Reddit community created for you. Here we are proving our methods with real accounts. We trade for several years and we show that it can be done profitably. You can subscribe as all profits go to our subs. You can find all the details about our accounts. However, since you are new in trading, using real money is almost forbidden. Practice will make you better and do not expect fancy cars and fake promises. Trading is real challenging and the numbers are against you. You won't need any money to start and everything is totally free. For most of our videos, you will find a link in the description that will lead you into a more advanced version of the video, but as beginners, I do not recommend. Stay with the basics and demo trading. So let's begin your journey. Hello fellows, in today's episode, we will explain what is an indicator in trading. When you are new, you will hear them all the time. Indicators, osculators, momentum indicators, there are thousands of them. You can check our original channel as I provide a deep analysis for many of them. Please avoid experimental indicators section as they are made for people already familiar with trading. So what's an indicator? An indicator can be used in any set of data we want to analyze for business purposes to predict some seasonality in sales and so on. In trading, however, as part of technical analysis, no matter what we are trading, helps us to identify potential trade, potential entries and exits in the market. Of course, every time we try to make profits. All indicators are using a formula, a set of calculations based on previous prices. Either is a very simple one, yet very effective, either sometimes more complicated. I will open some real markets to analyze the type of indicators and give some examples. First type of indicator is the trend trading indicator. This one is one of the most basic and important indicators and a very simple one to use. Remember, we won't analyze them, but you can find all the information if you want to go deeper in the useful links in the description of this video. So, it does what it says, follows the trend. This indicator is called the moving average indicator and there are several types. After identifying a trend, the entry can be here, exit here, and you can use it with this very simple way. When prices start closes above the line, we go long. When the prices start close below, we exit our long positions and we go short. This sounds very easy, but remember what we have already said. It is very easy to analyze the market after the market has done the move. You don't know where the prices will go and in what direction exactly. You don't know if the prices will keep going higher and you don't know if the prices will keep going lower. This is why trading is very simple, because you need just to make a decision, a simple buy or a simple sell. However, it's significantly more hard. This indicator is classified as a lagging indicator because cannot predict future prices and it just follows them. Also, it's not sensitive in detecting price moves fast enough. The second category is means reversion indicator. There are also lagging indicators and I have opened here as an example. I will use some Bollinger Bands. However, the idea remains the same as there are several types. This indicator is also the type of indicator that creates a channel around the prices. Looks more fancy, however it's still a lagging indicator. The idea looks very simple. Prices like to travel in this river-like channel and we must take advantage of it. When the prices hit the top of this river, most likely they will retrace, and the opposite. When the prices hit the bottom, they will return. And here comes the tip of this video. There is no perfect indicator. Use them as signals to verify your trade. The third type is relative strength indicators. These is considered to be some leading indicators or osculators. Measure buying and selling pressure in the market. Points that most likely the market will reverse. They appear in the bottom of the prices and I will use the stochastic indicator for this example. Market movement evolves through buy and sell cycles. that can be identified through relative strength indicators. The stochastic can measure these cycles, a peak at overbought or oversold. Of course, these are just constructs. There is no overbought or oversold in the market. This level signifies a shift in the opposite direction, with the two indicators line crossing over. The indicator works very simple. At this level, we have some overbought conditions. The price crosses over, the line crosses over. This means that we are ready to take a short position. And exactly the opposite. At this point, the prices are oversold. The line crosses over, again, we consider to take a long position. Another type of indicator is the momentum indicator. One of them is the MACD, as I have opened here. This is a very popular and traders can identify a rapid price change. This momentum tool measures how fast a particular market is moving. Very easy to use and one of the most common. Here is how it looks like. There is a histogram and a signal line. This is the most simple version you can find out there. When histogram goes above the baseline, we have a buy signal. However, there is also the signal line. When the signal line starts to leave the histogram, market is losing momentum or speed, if we could use these expressions. Our last indicator we will see measures volume, the OBV, on balance volume. Remember that in this episode we are oversimplifying them to get an idea. You can find all the information for all of them in the links in the description below. Formulas, modification, pros and cons, how they behave in real markets, and many other useful information. But since you are new, stick with a basic. This indicator has the basic line that follows the price's volume. The indicator adds or removes volume based on previous day's closes. The indicator can mislead you as it measures volume and not prices. For every indicator, there is a proper use, but don't worry, that's why we are here. So that's it for now. Thank you for watching our videos. I hope you enjoy. You know that we need your subscriptions, likes and comments for the YouTube algorithm. Help us to make more content and trade safe.